So let's take that point a little further. What does the US elections and global events actually mean for markets, risk environment, and emerging markets in particular? I have a special guest joining us today. Nancy Davis of Quadratic Capital's iVol ETF is here with me on the show today. Nancy, good afternoon. Thank you so much for joining us. Let's start by understanding your thoughts on how overall risk environment is looking right now for asset class globally as things stand.
It's definitely an incredibly challenging time for investors because we've had a non-economic shock with the pandemic, and we've never seen this in our recent history of financial markets. So people are trying to figure out whether we are going to have a recovery, whether there's going to be a vaccine, and I think it's never been a more challenging time for investors to look for diversification in their portfolio because so many asset classes are quite expensive.
Nancy, in your reading, how would risky assets approach US elections, which is one of the biggest event for global asset markets? And the fear is that volatility usually spikes around this time. So what's your view on how volatility be for risky assets?
Yeah, I actually think all assets, not just the risky ones, even the ones that people consider are, safer, will see a lot of volatility around. I don't necessarily think it'll be in November for the U.S. election. I will think it'll be afterwards if one of the contestants or one of the candidates doesn't concede, and there's a hung election and people are claiming voter fraud and mail fraud, and I think that will actually bring more volatility. Obviously, we do not know if that's going to happen or not, but I don't think the election per se is such a big deal. I think it's more what happens after the election.
Nancy, how are US markets looking to you in terms of valuations? Some say that it's been a narrow rally over there, led by select large cap indices further, and it's come on the back of 10 years of outperformance, so probably valuations are rich and ripe for a correction. How do you look at that argument?
I mean, you've definitely seen some U.S. asset classes recover. The tech stocks, as you just mentioned, the credit markets, whether it's investment grade or high yield in the U.S. But you've seen other markets that are incredibly depressed. For instance, U.S. bond volatility, so government bond volatility, hit a all-time history of financial market lows in September, so just a few weeks ago. And that's a little, kind of scratch my head, makes me question that, because we are going into the US election, and regardless of which candidate wins, I think one thing we know that will happen is we'll have more fiscal spending likely, or at least try to. And that seems like a catalyst to make interest rate volatility in particular move higher. But we haven't seen that happen. So I think you have some, just like in the equity market, you have some sectors that have really been outperforming and others that are lagging. I think in the fixed income markets in the US, you have some segments like credit, anything with a credit spread has done quite well, whereas other markets are trading inflation expectations, for instance, very, very low level of inflation expectations, because people don't believe the central bank is going to be able to stimulate inflation.
Nancy, there's a view in the market that the next 10 years actually could belong to emerging markets, the way developed markets, particularly US, has rallied a whole lot last 10 years. If global central banks remain accommodated the way they are and the dollar index continue to head lower, the entire outlook for emerging markets could improve a whole lot. How are you analyzing this EM versus DM equation?
Well, I'm not surprised by that view at all. I mean, take India, for instance. You have some of the world's best demographic stats out there. So just looking at the data, you have to think that the markets are going to do better in some emerging markets. I think the problem that I have with the category emerging markets is it lumps everything together. And you have, I think, some countries that are going to be leaders and innovators and create favorable policy that allows capitalism to take place. And then you're going to have other emerging markets that have bad policy, bad governments, weak currencies, high inflation. So I think it's going to be a case of looking for those EM countries that are set up to win in the future and taking out the ones that you don't think are going to do very well.
Nancy, lastly, I would like to understand from you your reading of the quality of recovery and how markets are pricing it in. Looking at the PMI data globally, the GDP data coming in from all regions, do you see this recovery actually gather pace from here on?
Yeah, politics are important. And definitely there is a lot of tension around the world. I do think there's been some positive movement in the Middle East with the Israel deal, but there's definitely other issues that are at play and rumbling around the surface. But that's always there. So I'd say I think geopolitical risks are always underappreciated, and I think whenever you have a event, it's usually not priced into the market and is a surprise. I think it just makes a further case for why investors have to have a diversified portfolio, because you never know when there's going to be a geopolitical event, when there's going to be a natural disaster, when there's going to be, for instance, now a global pandemic. These are just events that you cannot predict. And I think it stresses the importance of having a well-diversified portfolio so you don't need one outcome to happen to do well with your wife's savings. You need to have it diversified so you can be ready for anything that you know that is a concern, like the U.S. election we know about, but there are other things that, might be happening on the geopolitical side or on the health side that you just can't prepare for.
All right, Nancy, we'll let you go on that one. Thanks so much for joining us on the show today. With that, let's take a short break. More news and analysis on the other side of the break.